Hi traders, welcome to Monetize. It's time to record the new weekly forecast for the week starting on 1st of May. In fact, it is also the new month beginning tomorrow. So before we jump to the charts, let's have a look on the economic calendar for the upcoming events of the week. So here, tomorrow being 1st of May, International Labor Day. So most of the markets, they are closed across the world. So the action starts on 2nd of May. So 2nd of May, the first important announcement is RBA interest rate decision. So here is the scheduled time for RBA interest rate announcement, then followed by European CPI numbers, the inflation data from Europe, and then we also have the Reserve Bank of New Zealand governor coming up on Wednesday. Then we have non-farm payroll week, plus it is the most important event, which is interest rate from the Federal Reserve. So a lot of action in the upcoming week. Now let's move to the charts. So let's begin with dollar index. And here is the chart for dollar index. So based on long term time frame, that is 3 months. So what I've done, I've marked the rising channels here, the multiple channels. So here is the confluence of resistance. So dollar index started rolling down from this resistance level, that's around this area, and now we have multiple channels. So I have used different colors to differentiate the channels, and now I'm just moving back to the lower time frame, that is monthly. And in fact, here on the 3 monthly time frame as well, if you can see, we have a sort of bearish divergence. So higher high formation with bearish divergence on RSI coming in play on 3 monthly time chart. And let's move back to monthly. So here on monthly, if I zoom in, so right now we also have one more green rising channel inside the bigger green one rising channel. And if you notice, the current price is already outside the lower boundary, which means signs of weakness. Apart from that, I've also marked fib levels starting from this low until this high. So when we have applied Fibonacci retracement tool here, so currently dollar index is sitting at 50% retracement level, which is also a confluence of horizontal support here. So right now the price has even fallen below this horizontal level. Now the upcoming levels could be in between 50 to 61.8, and if it continues further down, then 78% retracement level is coinciding with the lower boundary of the bigger rising channel. And if we talk about RSI is currently exactly at the halfway mark of the monthly chart. Moving back to weekly now, and here on weekly, RSI has not yet completed the bullish divergence. So for completing the bullish divergence, we need a lower low formation. So this is the first leg down, a bit of correction here. Now if it continues lower and completes the retracement up to 61.8 Fibonacci level, then it may give us the second low required to complete the bullish divergence, and it would also be the lower boundary of this declining channel here. So weekly, no clear picture as of now. I'm awaiting for dollar index to go down further and create the second low to complete the bullish divergence. Now let's see what's happening on daily. Now as per daily, we already have double bottom here. So first bottom and second bottom, and it has also completed bullish divergence here. That's it. Now in order to complete the higher high formation or bullish breakout structure, it needs to break above this area, which should be above 105, and it also needs to break above this falling trend line resistance. So diagonal resistance and horizontal resistance. Apart from that, we just have bullish divergence on RSI. That's it. No other bullish confirmation. Now let's move back to 4 hourly. On 4 hourly, if we talk about bullish divergence coming in play with double bottom on RSI, again the highest level in between this bullish divergence is somewhere around 103.2. So we are still not bullish, and it has not even crossed above this diagonal resistance. It went up to this area, the diagonal resistance line, and rolled down. So all signs of weakness as of now. I do not see any higher high formation or change in the direction. It is anticipated because of the bullish divergence, but I am not getting the higher high formation or higher low formation as of now. So definitely we have signs of weakness, and majorly it depends on the new interest rate decision and the Federal Reserve statement post announcement of the interest rates. So highly dependent on the upcoming announcement of the interest rates. Based on hourly chart, we can see some sideways consolidation. That's it, nothing more than that. Plus it has not crossed any of the desired resistance areas. If we turn it into candlesticks, so again I can see signs of weakness here. So a lot of bearish pressure, but the bullish action is not convincing. So it may just bounce up, or it may reach to this falling trend line and again continue to the downside. That's it. So let's get back to the higher time frame candlesticks formation. So let's move to daily chart, and based on daily, the last daily candle formed on Friday, it has a lot of pressure on the top. So a lot of sellers sitting here, and this is the crucial level, 50% Fibonacci level based on the higher time frame. So currently no clear decision based on the charts. So number one, it needs to break above the diagonal resistance, make a retest, continue higher, and for long-term bullish pattern, it needs to break above this boundary, the falling paddle channels top boundary. That's it. If we move to weekly, and based on weekly, you can see most of the candles in the recent week were doji candles, not a clear indication here. So I think let's wait for the interest rate announcement to get the better picture, more clear picture in the coming week. Now after dollar index, the next instrument is Euro New Zealand. Interestingly, it reached the area of resistance. So here I'll turn it into line chart again, and I've marked the horizontal levels here based on the previous cycle, and it touched the resistance zone exactly, falling in between 1.8112 to 1.8237. The red box is marked here, so this red box is marked for the resistance area. Plus, if we see the pattern, we have higher high formation on the chart with lower high formation on RSI. So on weekly it has formed bearish divergence. Now let's move back to daily. Based on daily, if we look at the wider picture, we have bearish divergence in play, and I've also marked a very steep rising trend line on the latest uptrend here. So I'll zoom in, moving back to candlestick chart. So here, if you notice, I have marked this rising trend line, and currently the candles, they have broken below the rising trend line. So the daily rising trend line support is gone, and RSI was way too overbought and sharply moving downwards. So Euro New Zealand looks bearish based on weekly bearish divergence and the price action on the daily time chart. Now let's move back to 4 hourly. Now on 4 hourly, turning it back to line chart, higher high pattern with equal high on RSI means bearish divergence, and it has also broken below the required structure level. So we got the bearish BOS, and we also got the bearish breakout of the rising trend line. So next thing is to look for the reversal to complete its A and B formation. Then we'll apply the fib starting from A to B. We'll wait for the price to move up and reach our discounted zone, the favorite discounted zone based on Fibonacci levels, and we'll attack for the sells. So the idea is to join the sellers to look for the selling opportunity in the upcoming week. So this is the plan for Euro New Zealand. We can also move to the next lower time frame for more detailed information. So here, let's go back to 1H. So based on 1 hourly, again we got the bearish divergence followed by a break of structure, similar pattern as for 4 hourly and break of structure, and clearly it is now printing lower highs and lower lows. So let it complete the first bearish leg, let it complete the point B, we'll look for the retracement and we will join the sellers. Plan for Euro New Zealand. Now let's move to the next currency, that's pound JPY. So here, based on monthly chart, if we see the two bigger green parallel channels, the declining channels, so the price is clearly broken above the channel number 1, entered into the channel number 2, and we still have a lot of room as per the midline level of the second channel. So here we have a lot of space for the GBPJPY to move up, and based on previous cycle, the next resistance level is quite far off. So we can see the next resistance level around 188, 195. So lot of distance to cover. And right now, if you look at RSI, give me a second, let me zoom in. So here, based on RSI, it is going to complete the next high, maybe around the next horizontal level, that's around 175. Again, the round number, the psychological number, and we may get bearish divergence or maybe equal top on RSI for some pullback, and it is still inside the smaller green channel, the rising channel. So based on weekly, based on monthly, sorry, we are still on monthly, so let me move back to weekly. Yeah, so based on weekly, here I've marked the rising channel, the green one, the latest one, and the price is following this channel exactly as per the boundaries. So here we have lower boundary, the price retested the lower boundary, bounced up sharply, and now it's going to touch the next horizontal resistance level around 175. Currently it is trading above the half line, the 50% line, or the midway of rising channel, which is a bullish sign. Now based on RSI, clearly it has reached the previous top, and it looks that it is going to break above. So once it reaches the overbought area, maybe that would be the point where the buyers would take a pause. Now moving to daily. As per daily, there are no signs against for the buyers. Clearly higher low formation and higher high formation in play. I have also marked two declining channels, the falling channels, red ones, the parallel channels, and here I believe it is going to touch the top boundary of the falling channel. It may come back for the pullback, for the retrace, and we should look for the buying opportunities. So the plan remains to buy on the dip for GBPJPY. Fundamentally, Japanese yen is very weak. The recent announcement from the Bank of Japan's governor is not in favor of JPY. So it definitely makes sense to look for buying opportunities only in JPY pairs. So here, based on 4 hourly, higher lows and higher highs. As of now, no signs against. Any pullback, any correction should be taken as an opportunity to buy. The next instrument we'll talk about is SGX NIFTY. Now, based on weekly, I've marked Fibonacci retracement from this low until the latest high, and price dipped exactly towards 61.8 and continued higher. Now it may complete its equal top, or it may form a new high to complete the higher high formation on weekly, and RSI should give us bearish divergence. So still a lot of room for SGX NIFTY or NIFTY to rise further, and it looks clearly bullish as on weekly. Moving to daily. So here, based on daily, I've marked the declining channels, and the price has clearly moved to the second channel, and in fact it has also broken the top boundary of the second channel here. A clear breakout. Now let's look for the pullback, and I've also marked a rising green channel. So the intersection point of the declining and the rising channel is somewhere around 18,000. Again, the psychological number 18,000. So until it remains above 18,000 or 17,850, the plan is to buy on the dips. I'm not looking for short trades here. So higher high formation everywhere. On daily, no signs against. So Nifty remains clearly buy. Moving to further lower time frame, 4 hourly. This is the rising channel, the green one, and currently the price has crossed the 50% mark of the rising channel. It may touch the top boundary and come back for the correction, and based on RSI, it is way too overbought right now. So please do not buy immediately until you get the correction in the prices. So any correction towards the midline or even to the top boundary, or maybe this boundary, the green channel, should be taken as an opportunity to buy. So clearly, until it remains above 70,850, the plan is to buy on the dips. Please do not try to short it. Similar pattern on 1 hourly, but the only difference on 1 hourly is it has now formed bearish divergence. So maybe it will just come back for the correction based on bearish divergence. So correction should be taken as an opportunity to buy. So this is the plan for Nifty. Now let's move to crude oil. So here, crude oil also remains buy on the dip. Now I'm on the weekly chart, and I've marked a horizontal blue box here, which is the resistance here on the weekly chart, which was resistance and now turning into support. And currently the price was following this declining green channel, and it formed a lower low formation with bullish divergence, and it has also created a higher high here. So, and it has also passed the top boundary of the declining channel. So multiple factors giving a bullish idea for crude oil. Moving to daily now for better visualization, better understanding of the pattern here. So it has created higher high, it has broken this blue boundary, which is the previous resistance. Now it is acting as support, and if I turn it into candles chart, look at the candlestick pattern here. So price broke the blue boundary. Now it has dipped back exactly within the blue band, which is now acting as support, and we have the reversal candlestick pattern here. So it should be taken as an opportunity to go long. Keep in mind, if we get one more dip, it may come back towards 61, or worst case scenario towards 78.6 of this bullish move. So let's keep on buying in tranches until it stays above 78.6, that is 69.7. in round number you can say $70 mark. So every dip should be taken as an opportunity to buy, and the next upcoming target is around 83 to 83.5. so this is the plan for crude oil. Keep your stops below this area and target 83.3 or 83.5. It may continue further, but as of now the first target is around 83. So crude oil also remains buy on the dips. So here is the pattern on the lower time frame. So in the previous week we got a massive gap here. Now the gap is filled and we have the price coming back to the same blue band. It has not broken the falling trend line on 4 hourly, but I believe it should be done soon. It should be broken soon. Yes, right now it is exactly at the falling trend line area. So please buy cautiously or buy in small tranches. If you plan to buy now, buy in small tranches so that you have equity and you have capital to add more positions once it dips further, and take advantage of this next upcoming bullish move. And the next instrument is NASDAQ. Now based on weekly, the bullish divergence coming in play. I've talked about this bullish divergence in my previous videos, and here is the BOS level, that's around 13,500, and we are still in this red colored rising channel, and there is a lot of gap for RSI to reach the overbought zone. So bullish as per weekly, NASDAQ remains bullish. Moving to daily now. Now based on the rising channel, the bigger one here, the plan is to buy on the dips, and this was the bullish flag or the smaller bearish channel inside this rising channel, and currently the price has clearly broken this channel, and the base is formed around 12,960. 12,960 or 12,950 should be taken as the base, as the support level, and the next upcoming target is 13,500. Bullish pattern on 4 hourly. So breakout of this falling channel, the bullish flag is completed. So if you get an opportunity, if you get pullback during the upcoming week, take it as an opportunity to buy, and you can target 13,500. So this is the plan for upcoming week. I hope I've made most of the charts, I've explained most of the charts clearly. If you still have any doubts, you can get back to me, and have a nice and profitable trading week ahead. Thank you and bye-bye.